I've been pushing PayPal since before it was spun off by eBay in the 30s. Now it's at $256. Although perhaps more important, it's pulled back from $310 at its peak over the summer. That makes it attractive. Everybody recognizes this one as a digital payments and online checkout solution. But in recent years, PayPal's gotten into a range of businesses that we typically associate with traditional banking. Their Venmo peer-to-peer payments business now handles payments and merchants. They've even got their own debit and credit cards. More important, in the last year, PayPal's going into overdrive. They've got a buy now, pay later platform, BNPL. They offer cryptocurrency trading, and they just launched their Sure app, which is like an all-purpose digital wallet that combines all these services onto one single platform. Oh, and now PayPal's even letting people open up high-yield savings accounts through a partnership with Synchrony Bank. I think this is huge. Younger Americans have zero faith in the old guard of the financial system. Fairly or unfairly, the banks are hated companies. There's no trust. But PayPal under Dan Schulman? Well, let me just tell you something. I've never met a younger person who didn't say, you ought to talk more about PayPal. I mean, they love PayPal. It's like they love their bank. I mean, who loves their bank? I don't love my bank. I fight with my bank. PayPal is loved. My kids love PayPal. It's exhausting. So while the stock remains expensive, I think it's worth buying now that it's down 17% from its highs, which is why we added some for the Charitable Trust last week. We have much more information about PayPal in our Investment Club bulletins. I suggest you read them before you pull the trigger, because you need more information than I just gave you, and we can do that in the Investment Club, which is why I always feature the QR code on David's face, and sometimes here, down here, and then occasionally over here. I'm going to leave my arm up here, see if I can keep it up there. It's kind of like when you ever go to the pyramids and you put the pyramids in your hand, or the Leaning Tower of Pizza? How about that, huh? All right, how about Square? This is another fintech story that's transforming itself into a nouveau bank. Square's got its start with these little gizmos. You ever see those little white things? Turn a phone or a tablet into a point-of-sale system? First I went to a flea market and I saw it. I said, wow, I got to get one of those. But, I ended up buying postcards. Then they realized that they had all this data about how small businesses were making their money, so they rolled out Square Capital, which offered loans or cash advances to these businesses' loans, by the way, that could be repaid directly from the receipts. So if you're doing well at a restaurant, they already know how much you have because they look at the receipts and they loan. Like PayPal, Square's got its own peer-to-peer payment system. It's called Cash App. It is the biggest and fastest growing part of Square. It's what everybody likes from the institutional end. They were one of the first outfits to offer Bitcoin trading, and now you can even trade stocks in Cash App. In fact, Square went so far as to actually get a bank charter, but so far they're just handling loans and deposits for merchants, not individuals. Again, this is a great long-term story, and now that the stock's pulled back 16% from its August highs, I think it's too enticing to ignore, but not as enticing as PayPal.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.